What's up, everybody? We're gonna be going over 5 stocks to watch this upcoming week, and that week is gonna be January 25th through the January 29th week. We're gonna go over our plays, what we're gonna be looking into. I'll go over the charts for some of these, that depending if I'm doing calls or not. So the first one we're gonna go over is ticker ET, is Energy Transfer. As you can see here, it had a nice long run up. Then it had a nice long pullback, and it started trading within this window. Slight window here towards the end, so it started kind of bouncing off here. So this next week, we're going to see if it kind of drops back down here and gives us another indicator like here. As an indicator here, if you can see that. So once this indicator popped up, we waited because it traded a little bit, then we waited for this long call. If we waited for that long call here, we would have, made that 14% on gains on that. So we're going to try to do the same thing here. It's coming back. We're going to wait for those same signals. Hopefully, probably get in within the next, maybe Monday or Tuesday, maybe with those signals. If that happens, we could either do one or two things. We could either do a swing trade, or we could do day trade, depending on where my capital is at that time. If y'all want to play on this, just be careful. Remember, you do your own research on these. These are my charts, and the way I read things is probably going to be different than the way you read things. So that's just this play for this one. The next one is going to be very interesting because it's a very popular stock. Next one is NEO. I saw pretty good an opportunity to get in here. Check this out. I'm going to go over here. All right. So I think I was looking at, right here. Okay, so check this out. So we had NEO, right? We ran all the way up to the high of 67. Then it had a nice pullback. Had this nice short pullback. And started trading right here within this channel here. And then boom, it popped out. It broke out of this channel. Gave me this long call here. So it's giving this continuation. So I did this before previously. And I'm going to show you where. Right here. So it was trading within this little channel here. It kind of pulled back, traded, then it broke out. Gave us this long call again. And then it gave us this big, huge, nice rise. So this is a 41%, rise within 11 days. So if it does this again, what I'm gonna do is probably starting Monday. I'm probably gonna do a long call on this, with the expiration date of probably the 19th on this one. So let's go check a NEO out. All right, so call by. All right, so I'll probably do something, and I'll probably try to get. Somewhere right here. Probably try to do this $500 call here. If we do this $500 call, we need to be able to make sure that our funds are gonna be great. So our returns. So let's go with this. We're gonna put this here. All right, see this here. All right, so we do NEO. This is gonna be enough 19th. And what did I have? What did I say I was doing? 62. Let's do the 62. Alright, let's check and see. Alright, see, there's a lot of red on here. So we would need NEO within the month to push up. And I think it's going to push up significantly. So if you notice here, it pushed up, about $18 within 11 days. Yeah, about $20 within 11 days. So here I'm hoping that we get at least a $12 rise from here. So that'll push NEO about 74 is our target. It's gonna be my target. You might be different. So if you go switch this to 85, all right, and I said 74. So hopefully we can make some pretty good gains here. You see here. This is just me, this is the way I kind of play my stuff. So you might do yours a little bit different, but I'm gonna do as well is when I buy calls, what I do to secure my break-even price and push my break-even price lower is what I do is I like to go in. So if my expiration date is the 19th, I like to go once my call's already been bought. I like to sell calls to help me protect myself. So in other words, what we're going to do is expiration is 5 February, which is what's that, like 5 February. From here, it's within the next 2 weeks. So within 2 weeks, we're hoping Neo stays under 70. So we're gonna make $165 of this call, right? So that will push our break-even price down further. I don't know if you noticed that. You get this 165, and you push it. You subtract that 165 from here, which gives us a break-even. Let me see if I do calculator for you real quick. So our brand new break-even will be 66.28. So I notice that it pushes it pushes this down further, so it mitigates our losses even further. This is what I like to do when I do a calls. I like to sell the covered calls as well. And if it does shoot up to 70, guess what? We still got that. We still made that money anyways, selling that call. So it's still profit for us. You know, we can capitalize on selling these calls. So we're doing multiple plays on this. And this is what I like to do because I know for sure that within the 2 weeks it's probably not going to go up this high. So then, by the time that hits this week here, I could probably play it a little bit safer, and probably I'll bring it down a little bit and play a little bit safer and see depending on where the stock is. But I think it's going to go to about 75, maybe $80, and that's my predictions on this. And this is how I play this one. So we're going to see how that goes, and we're going to go from there on that one. So the next stock I was looking into was this one was it UW? This is like wholesales mortgage, I believe it was called. It just went through a merger, and I like this one because this one looks like it's about to run up. So notice that it's trading within this window here. It just recently had a run up here, and then it had a nice pullback. Nice pullback where it's sitting really low. So and it's hitting off of this 200-day EMA right here. Notice it pop right off of this 200-day. So as soon as this breaks out of this channel, so if I see it breaking out of this channel like up here somewhere, I will put in another long on this one. This one will probably be a leap. If you know what a leap is, it's going to be something that's kind of over 8 months. So show you an example here. Was it WMC? And I do own this one, and I plan on selling this one actually and buying a leap call. This leap call is going to make me more money, and I'll show you why. Alright, so here, now I'm going to do a leap call probably either going to be August or December. I'm not too sure yet. Probably be in December. And I'm going to do this $10 leap call. So check this out. This is going to be $10 leap call. It's going to be $3.85. And we're going to go back over here. We're going to do UWMC. Alright, we're going to go here. We're going to do this $10. So we're going to pay $300. Alright, and I think this is going to go higher than that. 30. Alright, so this is going to go higher than that. And the great thing about leap calls is they protect you a lot from theta decay because they're so long out. You're so long out that you're protected from theta decay. So, my max risk is 385, right? On this, my break even is 1385. So as long as it trades, it can trade all the way across, all the way this way, and a little bit up, and I'm still going to make profit, which is insane. More likely, it's going to obviously go up, and I'm going to make some decent amount of money on this. And I'm going to show you how to make more money capitalizing on selling cover calls. You can sell cover calls on these leaps. I'm going to show you what I mean. So 385 is what we're risking. And then say I want to keep this, right? I want to keep this call. What we can do is, say this price goes $25. It goes all the way to 27. Let's take 27 for example. It goes all the way to $27. And it's $27, and it gets there early like this. Depending on where we're at, and depending on the IV, which is implied volatility at the time that it hits this, we actually might make more money exercising than we are selling the call, and I'm gonna show you what I mean. Let's see. Because say it goes up to 27, right? So that's gonna give us. That means that we're gonna, if we own 100 shares, that's gonna be $2,700 total out of or just owning those 100 shares. And we have the option to exercise at any time. So remember, we bought this. We would buy this for $385. So we're gonna add 385 plus 1,000, so that gives us what, 1385, right? And then we say that the stock went up to 27, so went up to 27. So our profit is gonna be 1,300. The profit is 1,300, and so it's pretty much about the same. But the great thing is now we own the shares. So you either, depending on if you want to own it or not own it, you can either decide to sell it or not, or not. You know, for me, I like owning stocks because what I can do is during this whole time, during these months here, I can sell covered calls. You know, and let's say if I don't think the price is gonna go to $20 this quickly, I can sell this covered call, make $20 credit, bringing down my average cost price of my initial entry, which was it 385. So every month I can push that down. Every month I can buy, or sell on more covered calls every month to keep pushing it down further. So and that's why I like to kind of do leaps, and I think leaps are probably way more safer than they are trying to do short calls. But that's this play for me that I'm planning on looking into. Some other things that if you don't have a lot of capital, that these are great to capitalize on, are selling puts. So check this out. This is AMC, and if you sell a put on here on AMC, right, you're gonna sell. So you're gonna need $350 collateral to start this. Start this strategy, I can say. All right, so we're gonna get. So we buy this. We're gonna get $57 credited automatically into our account. That's gonna be a 16% ROI instantly credited into our account, guys, with a break even of $2.93. So if the price drops below 350, and we get exercised, because in America you can get exercised at any time before this expiration date, and I think in the UK waits to the end of the expiration date, then it gets exercised. But America, you can get exercised anytime within that time frame. So if we do end up getting exercised and we own those 100 shares, we can do on top of this. Now that we own 100 shares, we can sell these covered calls. We can sell this $4 cover call, make another $45. So we're making another $45 on top of what we're making. Make on top of that 57. And then if somehow, say, the price jumps right back up again and goes above $4, and we get exercised the second time, we'll end up making a difference between this $4 call, selling this $4 call, and selling the 350 put, which is $50. So what we do is we'll add this up to, so it'll be $50 because that's the profit that we're gonna make. Plus we get to keep the 45. Plus we also get to keep that 57. That gives us a total of $151 profit just off of that transaction. And you divide that by the 350. That's 43% return of ROI just on that transaction there. This is why I love selling. These are high IV stocks, and I'll tell you what I mean. They're high IV. Look at this, high IV stocks, 300%. That's why they pay you so much to hold these. They pay you so much to trade these like this. Because they're so volatile, but at the same time you can profit a lot and capitalize on that. Especially if you want to hold these stocks, you can get a huge discount on them. You say you want to hold the stock, but you don't want to pay $350. You can put this put in here, and then you end up getting it for $293 if it drops down to $250 or $350. So I mean, it's crazy discount if you know what you're doing. And another great stock that you can make a lot of money. This is my last play that I'm gonna do. I'm gonna show you off for this video. Then I'm gonna head out. This Express. This one's insane. I'll show you what I mean. So check this out. This is you only need $200 to start this. This one will give you about $75 to $78 to sell this put. Starting capital is $200. Okay, so let's do the math. 78. We're gonna divide by 200. That's 39%. We're gonna get 39% ROI just selling this put. This is why I love selling puts. High IV puts, not just any puts, high IV puts. So if this price drops under $2 and we end up getting an exercise and we own those 100 shares, we're gonna own those 100 shares, but our break-even price is gonna be $1.22. So as long as the price doesn't drop under $1.22, we're still positive. And then what we can do is we can go and sell covered calls, and we can sell this covered call here for $48. Make another $48 on top of that, 78. So imagine that you get 78 plus this 48. That's $126. You know, and then that's already 63% of our initial investment. Now we're getting just off of those 2 transactions, and we make even more money if the stock jumps back up above $3, and we end up getting exercised again. If we get exercised at $3, so we make the difference between this $3 and this $2, which is $100. So we'll be end up being making instead of $126, we'll make $226. So, and that's like over 100% gains. That's 113% gains just off that this transaction, because the volatility is so high. Look at this, almost 400% implied volatility. And this is why I love trading, selling these puts and selling these calls on high volatility stocks like this, because you can make a lot of money if you don't have that much capital. You don't have that much capital, and you start off with $100. Who else can tell you that you can make 100% returns in a month like that? It's very unlikely. You can get lucky with selling calls and stuff, but selling puts are a little bit more. I'll say they're way more safer. Especially if you don't mind holding the stock and selling covered calls on top of that. And at any time you can get out. Say I'll show you real quick. Let's see. And say you're selling covered calls and you have some decent money and you want to get out already. Notice here, I like to sell covered calls. So these are all the stocks I own. Notice here it says +5. That means that the stock is either going down, which means it's good for me. This one's saying the stock is going up, which is still good for me because I don't even look at this number. As long as it stays under just $12, I'm fine. But check this one. I say I want to get out of this one, right? So we click on here, and we're gonna buy to close. You don't sell to open. You're gonna buy to close. Let's say you got your profits. I made $18. You're like, all right, you know what? I made $18. So you're gonna hit this button here. And you still have to pay $60 though. That's the thing, because originally you paid. Hold on, that's that right? Maybe I did this wrong. Hold on. Oh yeah, that's right. No, that's right. I have to pay $60 because I got credited here. Check this out. So my credit was here because I carried it over from the other one. You notice I carried it over, so it cost me a little bit. So you would have to pay $60 to exit this position, but you still make some money. Overall, you make your money. And you can do that with all of them. You can close these at any time, like this one. You can close it at any time. Just buy to close. 40. So here I paid $45. Right? They paid me $45, and I'm selling it back to them for $40. So I'm keeping that $5 difference. So that's what I mean by that profit. You can keep if you want to get out early. Just notice here $5 profit. So if your thing is like, say, close to the max gain and it's early, you can sell it back early, so you can get your money back really quickly. But that's it for this video, guys. That was 5 stocks that I plan on looking into this week. I hope you have a great trading week this upcoming week. I know I'm excited. I did pretty well this week, as you can see, and I'm gonna hopefully continue to do well. I'm gonna do some good plays. And hopefully I can, capitalize on some of this money. So I hope y'all have a great day, guys, and thank y'all for watching.